The U.S. economy has just been hit with a major revision in job growth numbers. According to the Bureau of Labor Statistics, the U.S. added 818,000 fewer jobs between March 2023 and March 2024 than originally reported. We'll also touch on what to expect from the Federal Reserve's upcoming Jackson Hole meeting, where key decisions on interest rates could be influenced by this new data. So what exactly happened with these job numbers? Initially, the BLS had estimated that around 2.9 million jobs were added over the past year. However, a new revision reveals that the actual number is closer to 2.1 million. This 30% reduction is one of the most significant downward revisions since the 2009 financial crisis. The sectors most impacted by this revision include professional and business services, which saw a reduction of 358,000 jobs, leisure and hospitality with 150,000 fewer jobs, and retail trade, which was revised down by 129,000 jobs. On the flip side, some sectors like private education and health services actually saw upward revisions, but these gains were relatively minor compared to the losses in other areas. What does this mean? Essentially, the labor market has been cooling off more than we previously thought. The initial job growth figures painted a picture of a strong and resilient economy, but these revisions suggest that the slowdown began earlier than expected. Now, this revision comes at a crucial time. Later this week, the Federal Reserve will be holding its annual Jackson Hole symposium, where policymakers gathered to discuss economic strategy. With this new data in hand, the Fed's decisions could be more cautious. Federal Reserve Chair Jerome Powell is expected to address this weakening in the labor market during his speech. Initially, the Fed had been focused on taming inflation, which has been slowly returning to the 2% target. However, with the job market now appearing less robust, there's growing speculation that the Fed may start cutting interest rates as early as September. At Jackson Hole, Powell is likely to strike a balance between acknowledging the progress made on inflation and highlighting the new risks posed by a weakening labor market. While many investors are already betting on a rate cut next month, Powell might be cautious in his tone, emphasizing that future actions will be data dependent. Some analysts believe we could see multiple rate cuts before the end of the year if the labor market continues to deteriorate. However, Powell is not expected to commit to a specific course of action during his speech. Instead, he will likely stress the importance of remaining flexible and responsive to incoming economic data. So, to wrap things up, this job revision is a significant development that's likely to influence both the Federal Reserve's policy decisions and the broader economic outlook. As always, the situation is fluid, and we'll be keeping a close eye on what comes out of Jackson Hole later this week. Thanks for tuning in, and if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss any updates. See you next time.